All right, everybody, welcome back to our week 32 of tracking the local shifting real estate market here in South Jersey, our Burlington, Camden, Gloucester counties, 900,000 and below. And this week, we're going to be breaking the format a little bit. I have invited a fellow realtor from our office at Keller Williams, Morristown, Chris Alves, to hop on. And we're going to do the first half of this, kind of going over our metrics as we do. And then after that, we're going to talk a little bit more about kind of what Chris is seeing from his perspective. So let's just go through what we have for this week. So again, like we said, week 32, two of the things that I'm seeing that I'm really liking is the total active available listings. And I just wanted us to pull all the way back here to week 1. Again, we had a super high early start here. We were up close to 1,500. And we saw that through February, March, and April, May, there's really just tanked. But we have started to see a slow rebound. I mean, really, from the beginning of June, we have started to see this steady increase of over almost 200 listings now increased from June all the way through this second week of August. So that's good to see from both a buyer perspective and a seller perspective. It might be weird to say it on a seller perspective, but it was just becoming a frenzy because the sellers didn't think that there was anything for them to buy. So they weren't moving. Increasing the available listings past that lower threshold where it was like, a drought, this is actually going to help sellers because now they'll have confidence that they can actually find something. There's actually something out there for them to move into and transition. So I love that. Our new listings has been hovering right around 350, 359, 327. So all pretty steady there. Our under contracts are kind of following suit, just a little bit lower than those new listings, which is, again, that's good for our ratio that we like to see, a little bit more coming on the market that's coming off. We can see that in the total active listings. But man, closed units have just been all over the place. And again, just coming back here to this first week, I mean, the early 200s, then the 300s through August, we eclipsed like once or twice into the 400s, and that's it. But now we're at 283 after just having a 421 week. So just, again, all over the place. Expired, withdrawn, and cancels are low. We should expect that. Our price reductions are still fairly low. We should expect that. But this is really the name of the game, too, is that our median and our average days on market, how long a listing is sitting, super low. 55 and 20. These are still at our basically all year lows is these. And then the final part, and then I want to kind of have a little bit more of a conversation after getting through our metrics here, our median list price, steady. We've had really steady prices here over these past, I would say, about 8 to 10 weeks of pricing. It's been a slightly higher price than what we've had at the beginning of the year, but it's been a steady price. And that's, Chris, that's where I want to kind of bring you in. So but before we kind of get into our conversation in these last 5-7 minutes here of the video, can you introduce yourself a little bit just to our audience here of who you are and where you operate out of?
Yeah, definitely. Well, thanks for having me on. As kind of said, my name is Chris Alves. I'm part of the Alves team, family operated team, based over here at KW Morristown. My team leader is my mother. So I get to work very closely with her, for better or for worse. Just kind of piggybacking off of what Connor was saying, I know with the medium price point staying like there's like that mid 300 range. I see that, all throughout, Burlington, Camden County, predominantly, especially Burlington County where I predominantly work. It's just been really, really consistent with that. The days on market, as you said, in the beginning of the year, they were a little bit longer, and now it's as soon as, almost like back in the pandemic, as soon as the house came on the market, it went that quickly. So something like I personally have been telling my buyers is that if you really like a house, don't wait too long. Because even if you wait that extra 24, 48 hours, you might be missing it. It's not that they're getting crazy amount of offers. I'm talking to other agents like, we're negotiating 1 or 2 deals that have come through, but it's that they have the offer in hand, so they don't want to miss an opportunity to wait for your offer to come in because you're thinking about it. Mm-hmm. So it's one of those things where you just have to, if you really like the house and you're comfortable with the payment, jump on it. You never know. You might be able to get it, and if you don't get it, move on to the next one. Because as you see consistently, each week there's 300 plus houses coming on the market. So there is more inventory coming each week, which is always refreshing, because there's always something new to go look at.
So, Chris, I want to talk to you a little bit about, because your team, you handle, and you and your family, you do some investing, some real estate investing, and some flips and things like that. Talk to me through, because you're also a resale agent. So talk me through maybe some of the things that you're finding that are similar when listing a flip versus when listing a resale. And what are some of the differences you're seeing when you list a flip versus listing a resale? So kind of talk us through that difference of like a freshly flipped property as a listing agent versus maybe a, you know, again, an older home or a more traditional resale. What's kind of been similar and different about those two scenarios?
For sure. So for me, personally, because I deal with a lot of investors, as you mentioned, there's always not a lot of freshly flipped houses, just because in that market it is very few in between. Sometimes you have to kind of think like outside the box to get these properties. So when I'm running, you know, my comps, my comparables, a lot of the times I'm looking at, you know, just regular resale houses. So a lot of the things that I'm trying to take and consider when I'm pulling my comps and trying to figure out what the ARV is going to be on the resale side of it. One, I'm looking at how many, you know, bedrooms the house has, how many bathrooms, square footage, you know, just like the norm. But also what type of finishes does the house have? Have an updated kitchen? Does it have an updated bathroom? Personally, I don't look at pools because they're insignificant to me, especially as an investor. Half the time I tell them to get the pool if it even has like a small crack in it. But you know, garage spaces, things of that nature. So that's like really big. And then, you know, comparison the square footage. So I have to take all that into consideration. And then I do a little in my head and like, all right, if this house sold for example, 330, and you can tell the kitchen was from early 2000s, still a nice kitchen. Still to date. It's not something from like the 80s or 70s, but with a brand new kitchen with like the white shaking cabinets and the whole nine, you're adding about another $5,000 to $10,000 of value. Because if a regular homeowner was to do that, you're talking about a minimum $15,000 to $20,000, if not more, depending on what kind of cabinets you go with, and renovations. So those are all things you have to take into consideration when you're looking at as an investment standpoint. You know, does it have septic tank?
Let me go a slightly different direction with this, because I think that's a great point of like what you're kind of looking at, that you're going to start comping it out from a pricing standpoint. One of the things I've heard from a few of the people that I've been trying to do with investments is, you know, when you go back, rewind the clocks, maybe 5 years, there was a lot of inventory that you could buy at 50,000, 75,000, 90,000, 120,000, 150,000 that were pretty good bones. And you just had to put in another 80 to 100 into those homes and you could really sell them at a good price. Even the houses that needs a significant amount of work, I mean, there is nothing below 120, 150, sometimes even 200 in some markets. So talk me through how you guys have kind of been changing your approach to this with all of the, basically the buying costs, the startup costs being so much more expensive than they were just a handful of years ago. So how are you kind of overcoming that much higher price point, even on the kind of crappy way in of buying the flip from the start?
I apologize. I missed the last minute of that because I couldn't hear something happened on my end.
That's okay. So basically, the quick question that I'm asking is: 5 years ago, flips were cheap to buy.
Yeah.
Now flips are expensive to buy.
Yeah.
Why? And well, we know why, but how are you approaching this different now that the startup cost of flipping a house is a lot higher than it was a handful of years ago? So
for sure. And I apologize for missing that. So my average houses that I'm buying or my clients are buying for flips are between 160 and 2.25 realistically, which is 5 years ago, your average property was between like 30 and like 75,000, right? Huge difference. So it's like, and then the costs of repairing these houses have increased naturally, right? As anything else. So that's a huge thing to take in consideration. So when I'm pulling my comps, I have to really make sure. Fortunately, I have a background in, you know, flips and I have a sense of what's going to cost. So I have to really look at the profit margins at the end of it with commissions, and if they're using a hard money lender, things of that nature, to see if it's even worthwhile to send to my investor and to go out there and, you know, take a look at it. So with like the huge price difference nowadays, you have to be really smart with it. And you have to look at the days on market. And then another thing is, you know, be smart with your marketing price. I always say your marketing price is not your selling price, right? It's like when you go to a car dealership, you went there because they advertise the car is $22,000. By the time you walk out of the dealership, you end up paying $28,000. So it's like that same mentality essentially. So whether you're talking to a realtor or whatever, and they're strongly advising you, hey, you know, these are the comps, I advise you to list it a little bit lower to get the demand and the foot traffic through the door. Listen to them. Because I've been in the scenario where we listed it at where it should sell for, and then we get barely any offers or any attraction because we listed it too high. If we would have listed it maybe $10,000-$15,000 less, we would probably have more offers on the table rather than just 2 or 3. You know what I mean?
It seems really counterintuitive to a seller, though, right? I mean, we share this dilemma when we sit down at a seller's coffee table, right? And we're sitting there in their kitchen, and we're sitting there in their living room, whatever, and we go through this difference of marketing price and selling price. And I think, you know, one of the things is, you know, I sat with somebody who's owned a home for 20 years. Mm-hmm. When they bought this home, it was 2001, 2002. At that time, it was a different psychology of the market in South Jersey of how you list and sell properties, right? You always list a little bit higher because you know you're going to get haggled down. Well, I know really since 2018, I would say is when that really flipped. Mm-hmm. Right about 2018 is when that flipped, and the psychology of how you list your property and the strategy that you use to list your property is what you're talking about. It's, hey, if we know that market value for my home is probably about $300,000, and that's probably what I think I should get for it. We want a little bit more, but what I want to get, I'm not going to list it at 310 to 325. I'm going to probably list it at like 290, 295, maybe even 285. Because like you said, there's that, you want to get that interest in there. So is that a similar conversation that you're having a lot with sellers? And maybe do you find that sellers are starting to come around to that way of thinking, or are we still fighting an uphill battle to get the old listing strategies?
It's 50-50 for me. Some of my sellers agree, and they actually like it because they're like, oh, you're going to get me as many people as you can. And I obviously I give them, you know, proof. Comps are just facts. Where some, they're like, oh, but let's just try this. And if they give me resistance in that, I'll always say, not a problem. I understand you're comfortable. You want me to list it at, you know, the realistic sell price. Let's just do this. We'll list it at that price in 2 or 3 weeks. If we don't get many showings and we don't get at least one offer, we're going to reduce the price to what I think it should have been initially, and we'll see what happens.
So you're kind of already having the second conversation during the first conversation.
Exactly.
You're saying, look,
I want to make it clear as humanly possible. I think we should list your house at X. You want to list it at Y. I'll do it because, you know, it's my fiduciary obligation to, you know, whatever. And I'm going to stand by you. That's your decision. You got my support 110%. If it doesn't work out in 2 weeks, we're going to list it a little bit lower. Mm-hmm. And that I find, I actually just had a phone call on the way here today on why has the house been, you know, on the market for so long. And it was one of those scenarios. We told them to list it at this price. We listed it super high, and gradually over time, we lowered and lowered to where we initially wanted to. And that's when we started to get the attraction of buyers into the house. If he would have listened to us initially, he could have saved nearly a year off of his listing.
Yeah. And I'm just going to stop my share here as we sort of just come back to the video here and everything like that. But that's probably the number one thing that I'd like to get across for us today as we sort of wrap here, is that if you are considering selling and you are considering approaching the market, let's say a couple homes on your street have sold and you say, wow, I really think there's this price that I'm going to get, like you said, X. And my realtor is telling me I should list lower than that. Why would I list lower than that? I know that these other homes have sold for that much, and I know my home's even nicer than them. What are they thinking? Why would I take less? Well, first things first, like you said, the selling price and the marketing price are two different things. Our job is to what? Bring the most amount of buyers in the shortest amount of time to drive up the emotional buying so that buyers overspend for your home and you walk away in the best position possible, right? That's what we all want. We want that listing price, the marketing price, the selling price. We want that to be a strategy in and of itself. The other half of this equation, though, is where do these sellers go? So in the last little bit here, Chris, talk me through how you are protecting your sellers when they are contingent.
For
When
sure.
they have to sell to buy, right? Talk me through that. I'm a concerned seller, right? Talk me through that script that you have when you're sitting there at the table to make them feel comfortable about how to not make them homeless or not buy two houses.
For sure. So that's a huge concern, right? I apologize, my dog's barking in the background. So that's a huge concern as I try to throw something. We make sure that they're contingent on, finding suitable housing if they already haven't started the process of buying a house first. Or, sometimes I've been fortunate where they're like, hey, we're selling the house and we're moving down south or moving across country, whatever the case may be. We already have a place secured over there. Or, hey, we're just going to downsize and rent for a little bit. And then, in a few years when we decide where we really want to like retire to, we'll look. So, but definitely have a contingency in place if you are just a traditional buyer. I know a lot of people will be like, oh, well, I'm going to put my house on the market before I buy something. I advise always against that, just because if you're contingent on selling your house and we go submit an offer and we're saying that you're contingent on the sale of your house for the down payment or whatever case may be, the selling agent is going to, me as a selling agent, I should say, I want to see the contract that you have about you selling your house. When are your closings? When are your inspections? How far along are you in the process of selling your house before we even accept your offer? Because it's very few in between, right? How many houses went back on the market, as your stats show, but like there's always that possibility of what if. And then let's say I accept your offer and then something falls apart, because within the 3-day attorney review, the buyer got cold feet and backed out. Now we're in this limbo. But always just have some kind of like contingency in place and just, buyer seller needs to find suitable housing wherever the case that may be. And honestly, it comes down to like how determined, how willing are you to sell your house? Because if you get a really good offer because you marked your house at a really great price, and then you got all these offers and $20,000, $30,000 over asking price, can you live in a rental for a year or so, just for the time being, just to gain that capital? Those are questions you have to kind of ask yourself at the end of the day. What are you most comfortable with? And the longer you wait, the more it hurts, as we all have seen it throughout this last few years.
Sure. So that'll kind of wrap us up here today. Obviously, we talked about a couple concepts we've talked about in some recent videos, but I mean, a lot of this we're talking about it again because it's recurring. It's the recurring conversation at the moment. Sellers concerned about contingencies. What should I be expecting from a pricing standpoint? Is there something else for me to move into? How are total active available listings going? So, Chris, what we'd like to do at the very end here is just a little prediction, what we think is going to happen over the next couple of weeks. I'll go first. What I'd like to see is our total active available listings continue to have that steady incline. I'd love to get back to January levels of almost 1,400, 1,500 listings.
Mm-hmm.
I think when you're at that point, interest rates can almost take a back seat to now there's enough out there that I actually feel good entering this market. There's actually enough homes that I see that would be viable for me. And they're not getting 1,000 offers per listing. It's only maybe 1 or 2 or 2 or 3 or something like that. And that's the reason so that's what I'd like to see continue as a trend. From some of those data points, what's something you'd like to see? Is it prices? Is it days on market? What would you like to see over these next couple of weeks, or what you think will happen?
Yeah, definitely. As always, I would like to see more listings coming on the market, just so that way, more buyers have more opportunities when they might have not had, a couple months ago. And, the prices, I always say they're going to stay consistent, if not increase. So if you're waiting for them to drop, don't wait around, because, as soon as things start dropping, interest rates and things of that nature, you're going to see influx of buyers out there. And then your 1 or 2 offers are going to increase. If you're in a position where you can buy now, even with interest rates where they are now, I highly encourage you to just submit an offer, even if it's at asking price or a little below. You never know. Because sometimes it may not even be the price that wins the offer. Sometimes it's the term. So there's always a possibility.
Awesome. All right, y'all. Well, that'll wrap it up for week 32. We'll see you next week, week 33. See you, Chris.
Later. Thank you.